Have you ever found yourself thinking, in this ridiculously fast world of finance, just what's next? What's actually coming around the corner? What's going to fundamentally change how we deal with our money, how companies operate, maybe even how governments watch over it all? Well, you might want to buckle up because it feels like we're right on the edge of one of those moments. Congress has actually set aside next week, July 14th to 18th, 2025, as Crypto Week. And look, this isn't just business as usual, another session. It sounds like a really focused push to get some of maybe the biggest digital asset bills we've seen in the U.S. moving forward.
That's exactly right. And, for the financial institutions we rely on every day, your bank down the street, your credit union, this isn't just fiddling with regulations. These decisions could genuinely create a whole new playbook for how they use blockchain, how they handle digital payments, and honestly, how they stay relevant.
Right. So our mission here in this deep dive is to really unpack the three main pieces of legislation that are up for discussion. That's the Genius Act, the Clarity Act, and the Anti-CBDC Surveillance State Act. We want to dig into what they actually mean, not just for finance broadly, but maybe more importantly for you. So, okay, let's get into it. What exactly is on the table, and what's the real story for the future of finance here? When we talk about this kind of cutting-edge stuff, innovation, it feels like the biggest blocker is always just uncertainty.
Right.
And for years, it seems like the digital asset world has just been crying out for some clear rules. Is that where this first act comes in?
Precisely. Yeah. Financial institutions, banks, credit unions, they've been stuck in what you can really only call regulatory limbo. They're interested, they want to explore blockchain, but without a clear roadmap, they've been hesitant to really commit significant resources. And this is exactly what the Clarity Act is trying to fix. Its main job is to provide clear definitions. Which digital assets count as securities, which are commodities. It also assigns oversight duties, who watches what, and sets up standards for things like disclosures and custody. How do you hold this stuff safely?
Okay, so it's about drawing the lines clearly.
Exactly. And think about the impact. It's not just giving them a bit more confidence. The real potential here, the insight, is that clarity isn't just defining words. It's potentially unlocking huge amounts of institutional money that's just been sitting on the sidelines waiting for this legal fog to clear. So that clarity, that green light, would let banks and credit unions finally move past these small, cautious pilot projects. They could start really scaling up blockchain-powered services, maybe in payments or lending or even managing member identity securely.
Yeah.
It's a massive signal for a market that's basically been paused.
That clarity definitely sounds like it could kickstart a lot of activity. Okay, but what about the digital assets themselves, like stablecoins? They seem to be everywhere now. This is where I find it gets really interesting because they feel like a kind of bridge between the old financial world and this new crypto space.
They absolutely are a bridge. And that takes us straight to the Genius Act. That stands for Guaranteed and Essential National Innovation for United States. Quite a name. Its goal is to regulate stablecoins that are backed by the U.S. dollar. It sets pretty strict rules. Things like full reserve backing, which is absolutely vital given some past collapses we've seen, plus independent audits and really clear consumer protections. But here's the kicker, the real game changer. The Act specifically gives federally insured banks and credit unions the thumbs up, the permission to issue their own stablecoins under these defined rules, of course.
Wow, okay. Their own stablecoin.
Yes. Think about what that means for, say, community banks or credit unions. This could unlock instant payments, person-to-person, account-to-account. Imagine sending money across borders without waiting days or paying hefty fees, or even programmable money like for loyalty programs or engaging members in new ways. So the deeper thing here is that the Genius Act kind of subtly shifts the power dynamic. It gives traditional banks the regulatory okay to become the builders of these new digital payment systems.
Right.
They could potentially start competing head-to-head with the fintechs and the big tech wallets, using that trust they already have, plus their experience with regulation, to offer some really advanced payment options.
So wait, my local credit union could theoretically issue its own dollar-backed digital token?
Under this act, yes, within the defined regulatory framework.
That's a massive change in how I might think about my bank. Okay. But this does lead to maybe a touchier subject. What about the government getting directly involved in digital money? There's a third bill that seems to tackle that head on, right?
Indeed. And that's the Anti-CBDC Surveillance State Act. It's pretty direct. It would basically prohibit the Federal Reserve from issuing a retail central bank digital currency a CBDC, a digital dollar for everyday people issued directly by the Fed.
Okay, so it puts a stop to that idea, at least for now. Why? What are the concerns?
Well, the bill reflects some pretty significant worries. Things like personal privacy, how much will the government know about your spending? Also, concerns about potential government overreach into financial lives, and the very real possibility that a government digital currency could sideline or seriously disrupt the private banking system we have now.
Right, the banks and credit unions.
Exactly. For them, this bill is hugely important. It basically ensures they stay central to innovation in digital finance instead of potentially being pushed aside by a government-run digital wallet.
Yeah.
So this legislative stance, it's not just saying no to a CBDC, it's really making a strong statement about the importance of the private sector driving financial innovation. It essentially says, we want private institutions, not the government, to handle these core digital financial services for individuals.
That is a very clear line in the sand. But just to explore this a bit, are there arguments for a government digital currency that this bill pushes against? What's the potential upside people talk about?
That's a fair question. Yeah, proponents of a retail CBDC often bring up potential upsides. Things like maybe reaching people who don't have bank accounts, financial inclusion, or potentially making payments faster and cheaper, maybe even giving the central bank more direct tools for monetary policy. But this bill clearly sides with the existing private system. It argues that private solutions, like the bank-issued stablecoins we just talked about under the Genius Act, can achieve many of the same goals. And they can do it without the privacy risks that many associate with a government-controlled digital currency. The idea is that private companies can offer secure, regulated products tailored to community needs.
Got it. So it's prioritizing the private route for those potential benefits. Okay, so let's bring these three together then. We've got clarity for rules, genius for stablecoins from banks, and the Anti-CBDC Act blocking a direct digital dollar from the Fed. What's the combined effect? What's the really big picture taking shape here for the financial industry?
Well, if you zoom out, Crypto Week, with these three acts, it really does feel like more than just legislative housekeeping. It feels like a genuine turning point. Congress seems to be sending a very strong signal. The era of just waiting and seeing, that uncertainty around digital assets, that's ending. The message seems to be digital assets are a permanent part of the landscape, and the U.S. is stepping up to create a framework.
Okay, the end of the waiting game.
Right. And for financial institutions, the question really shifts. It's no longer if they should get involved with blockchain and digital assets, but more like, how fast can they get ready to actually lead? There's a serious competitive element here. The institutions that move quickly, the early adopters, they'll likely be the ones shaping what comes next. Think tokenized deposits, instant global payments, maybe blockchain for identity verification, new kinds of loyalty programs.
So the future is kind of up for grabs.
In a way, yes. The future of finance is about to get a major rewrite, you could say. Next week, Washington looks set to hand the industry a kind of blueprint. The institutions ready to build using that blueprint will likely define the next chapter. Those that hang back, well, they risk getting left behind. It's a pretty stark choice.
Okay, so recapping. The Clarity Act bringing the rules, the Genius Act empowering banks with stablecoins, and the Anti-CBDC Act keeping the Fed out of retail digital currency for now. Taken together, these could really fundamentally change how money works, how it moves, how we interact with it.
And that brings up a really important question for you listening right now. What does all this actually mean for the financial services you use day to day? What new kinds of possibilities might open up for how you manage your own money in this landscape that's clearly evolving very quickly?
Yeah, the ripple effects of these decisions in Washington could be huge, not just for the big banks and the economy, but for every single one of us trying to navigate this changing world of money and digital finance. It's definitely something to keep a close eye on.